Hey, hello friends, this is Martin from Secrets, channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show, where we quickly look at the technical charts and try to understand what happened in the markets and plan for a better trade for the upcoming day. That's December 19th, Tuesday 2023 tomorrow. We had a consolidation day, so indices have paused on the top after a big vertical move or a second breakout that happened in December. It has paused once again. Let's look at the charts before we dive into the wrap up. Here we go. Let's look at the plain candlesticks first. There's a Nifty here, clearly a doji, indecisive candle. The previous day's candle is completely engulfing that, so it's well within inside that, and that's indicative of consolidation. Indecisive consolidation is what the candlestick on Nifty is saying. Banknifty, it's bearish. It has closed below the previous day's opening. In fact, it looked almost like a piercing pattern. It went above more than half the previous candle's high and then closed below that. Yesterday's hammer is not full bearish, it's a hammer kind of, so that way it may not be bearish. It may not be piercing exactly, but it's a bearish pattern, and it has lost 0.5%, more than 0.5% Banknifty, but much lesser. It's a flattish negative close of less than 0.2% negative closing is what Nifty has, right? So if you look at, they are still in the top of that channel, trend line channel on Banknifty as well as Nifty, and also we are at the top of 78.6 Fibonacci extension on both. Right. So when candlesticks in the price action patterns indicates that probably there could be a reversal that's began today. It may be a consolidation in a range, just like it happened earlier. Initially it may be consolidation, and then it will decide, and then either move up or down. That's what happens. So it has started today, you can say, probably. So the immediate resistance upside would be the all-time high levels at 21,500 for the Nifty, then 600, 700 likewise. Supports and downside, first one would be the gap resistance at 21,200. It's a long way. 200 points, not much long. And that's a gap, so it can act as support. Then 2950 is a 61 Fibonacci extension level, and 2850 is a 23 Fibonacci retracement level. So it's all actors. This can also act as support. Now confluence of gap at 2700 and 20 exponential moving average is coming as a major support downside. So 2650 to 700 is a very good support. That's about Nifty. Banknifty, if you see, here also it's top of the channel and top of Fibonacci extension 78.6. First resistance would be the 48,200, clearing that. That's all-time high previous, means current all-time high. And if that's cleared, then it 48,500 will be the next resistance in Banknifty, because it's a rounding number. Then 49k. That's all that you can guess, because it's outside of the Fibonacci extension level also. Now coming on supports, first the support could come in at 47,500, right, which is where the breakout happens. So that can act as support, and then Fibonacci, then change in priority bounce up can happen from that possibility. Any of the supports downside, it can act as change in priority bounce and then bounce from it. So 23.6 Fibonacci retracement and 61.8 Fibonacci extension confluence coming in at 46,800 and that nearby levels. So that's going to be a good support. After that, 46,500 gap support, then 20 exponential moving average is coming in 46,200 and 46 rounding numbers is support. So that's about support resistance levels. Let's get back and summarize it. So it is a pause. Looks like the beginning of a consolidation. Flat negative closing in Nifty 0.18. It's just 38 points, and indecisive doji inside what we have seen there. But it still closed about 21,400. Not much of all. Flattish close. Negative. Remember, we had 26% of rally on the upside, and 13% for just immediate previous single. Banknifty also closed negative, but a little more extra, plus more than 0.5%, 276 points lost. So the top of the trend line channel and closed above 47,850. So remember, we had a 25% rally and a 13% from the last swing low. Intraday is range bound with a negative bias, you can say, in both indices. Now, Fyers are sold today slightly, very little. Remember, we had 9,239 crores of buying that happened on Friday from the Fyers alone. They has, of course, booked the profit. They has bought little 400 crores today. Alright, so net is again positive. Institutional purchases net it's positive, but FIs are slightly sold already. But FIs have been buying consistently for the last 4 weeks, so it's very positive. Money is flying in. Below the resistance levels, we already seen that. I'm not repeating that. Momentum is bullish, of course. It's not fallen to sideways yet. Of course, it has taken a dip in the momentum in the short-term daily charts. That's fine. Trend is also bullish. No crossover has happened. It's bullish itself. India VIX is spiking up again. It's 13.9. So it's because of the fear of the fall, fear of being at the top. That's all. Because all other fears are now resolved. The election outcomes and the Fed outcomes and all. It's over. Now it's about how much more steam is there? Is there correction going to come? How big is it? That fear is what is reflecting, I believe. But when the market is at the very top and then heading up, normally we should have cooled off a little bit, but it's not happening. But 14 is also, you can treat it as a low voltage regime itself. Let's take 15 plus as outside of the low voltage regime. So things are getting heated up. The Bollinger Bands, if you see, its upside expansion is still there, no doubt. Absolutely no doubt. Bollinger Bands, if you enable, you can see that it's expanding upside, which indicates that more up can happen. But that walking on the bands has stopped and it has slipped down. So the more it's away from the 20 exponential moving average, it's at 46,200. The further it is there in the Bollinger Bands away from the median of the bands, the more probability that it gets attracted towards that. Keep that in mind. But otherwise, it indicates up more further because of the expansion. It's not turned into contraction yet. Only when the contraction, the Bollinger Band contraction happens, we can say according to momentum also could fall into sideways, and that's how it is technically. So technically, it's at extreme bullishness. All-time highs multiple, breakouts multiple. There's no doubt about that. Direction is clear and it's up and up. That's it. But you have to be very cautious because without corrections, markets cannot move. That's how the markets are made of. Profit bookings come in, resistances play out. So not much of resistance has come in this 26% of rally. So one correction came that's around 10%, and then from there it has vertical move, and so some corrections may be due. Now that it has hit almost the 21,500 straight away in December from the 20,000 levels. So take 1,500 plus points move. So be cautious on that. It's all that. So major sectors, if you see, they're all close green, all in the bullish momentum. IT and FMCG and reality, they closed negative today. Pharma did well and 1% up more. Heavyweight stocks, Kodak and ITC has slipped into the ITC and Kodak Bank have slipped into the sideways. Others are all in bullish momentum. And Reliance did well, 1% move, right? So bullish momentum is maintained almost all the heavyweights except this Kodak Bank and ITC. So US indices are still green on the top, right? Dow Jones stays at the all-time high. Others are heading towards that, looks like. So it had broken out, and the rally can be tracked in the US markets. And when the US inflation, core inflation came down, that's when the rally began, and that's when the rally began in our markets as well. So it all is cooling off, and then rupee remains to be weak at the top itself, and crude oil is spiking, but it has fallen near to 70 levels, and gold is made an all-time high, but fell prey to the resistance and profit bookings, and then trying to consolidate to the top itself. That's what I see. A small spike today. So this may be time for momentum investing, but not for value investing. For that, we'll have to wait for corrections to come in. Probably 1%, 2%, 3%. Likewise, we reach corrections. You can have a SIP mode of quality stock investments done. Of The trade is direction is clear, but the problem is it was a vertical move without a correction. So be cautious about profit bookings and retracements, pullbacks that can come in any time. Intensity of that and duration for that, consolidation ahead of that, all this we never know. We can only learn the probability of supports resistance based on technical analysis methods that we have discussed earlier. Right? Risk management is all in our hands apart from that. So try to position size if the VIX is further spiking up, right? And always have hedge positions and then use, especially if you're using derivative strategies. You can always also have covered calls and cash liquid puts and all that, and have rental incomes when the market is moving up or down. Check out the playlist for the option strategies itself. That's all I have. If you're not subscribed, subscribe, share to friends. This is to Max. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.